Hello and welcome back to the show. So today I am super excited to be sitting down with a real estate investing, insurance, and risk management expert, Aaron, to be talking about what real estate investors should be looking out for when it comes to managing the risk, when it comes to their business and their properties, which is a really big and important topic if you are investing in real estate. It's a great investment asset to be able to make money, but also let's make sure we protect it as well. So Aaron, I want to welcome you to the show.
Thanks so much for having me. I appreciate it.
Yeah, absolutely. I appreciate you being here, and I want to thank you for coming on the show. So Aaron, before we get into anything, would you mind just sharing a little bit about who you are, how you got started, and how you were able to found your company Obie, and where that story kind of came about?
Sure. So Obie really at its core is an insurance technology company that's focused on real estate investors. Right now, primarily for the residential real estate investors, about 17 million of them in the U.S. And the way that we got into it is that I actually co-founded the company with my brother Ryan. I still remember it because it was so cold out. We were standing at the Macy's Thanksgiving Day Parade in New York City several years ago at this point. And Ryan's background was real estate private equity, primarily in the apartment space. And him and I had invested together in the past, and I had been dabbling in insurance a little bit at that point, and we were just discussing how much of a black hole this was, how it was probably one of the largest line item expenses that we had, but the one that we felt like we had the least amount of control and insight into. And so at that point, we made kind of the crazy decision to, throw caution to the wind, right, and start the company and really try and build the type of platform that we knew was such a substantial pain point in the market for us, but the one that we just nobody had really tackled that issue or that vertical yet.
Yeah, absolutely. I think it's really interesting that you guys are in the real estate investing insurance space. It doesn't seem to be the topic that's talked about the most when it comes to investing. Would you say that's the case as well when you're kind of going out there and networking with other investors?
Oh yeah, no, nobody likes insurance. I don't like insurance, right? Like I don't like when my homeowner's coverage or my auto insurance is coming up for renewal. Like it's that thing that I think for a very long time, and it's really a function of the way that the market operates and just the inefficiencies. Like people don't like insurance because they're paying for something that they feel like they actually they don't get a lot of value out of. And then when they do have a claim, that claim is like clunky, the process is broken, like it's super inefficient. So people get frustrated with it. And so then you have kind of that jaded population that's also like, well, hey, like I'm forced to buy insurance, but when I needed it, it wasn't there for me. And so as a result, like people don't, they don't think about insurance. It's the thing that they just have to buy. It's the thing they have to have before they show up at the closing table to purchase these assets. It's the thing that escrow pays for them on an annual basis. And so it's I think a really crucial item, especially in this market, especially some of the weather events and other things that happen, the unpredictability of your assets. So it provides like some peace of mind knowing that you have that coverage, but it is the thing that like nobody really thinks about, nobody talks about until recently. Now, given where the property insurance market has gone and the impact now that that's had on rates and people's P&L.
Yeah, absolutely. Right. I think, it is important to start thinking about it, especially as an investor, to be able to protect your assets because again, real estate's great, but you never know what's going to happen, right? I live in Houston and we had, that big flood come through a couple years ago and a lot of investors were impacted by that. So I think, having that peace of mind, like you said, is really important as an investor to be able to go out there and operate to the best of your abilities. And when it comes to, you know, investing insurance or as an investor, what would you say are some things to look out for when it comes to, maybe picking an insurance plan or, finding out, how much they should be covered for, or, as far as, maybe their experience will matter on that and some different things like that.
Yeah, it's a great question. I would say that there's usually three things to look out for. The first is to find somebody that specializes in this space, right? Obviously, you can come to Obi and that'd be great, but if you don't, and that's okay, find somebody that really does know and understand the space. And there's a specific reason for that. The insurance market is kind of set up where, the 17, 18 million individual landlords and small business landlords that exist out in the US, they're too small to go to the really large insurance brokerages that exist out there. Some of these are very large public and private companies like an Aon or a Willis or a Gallagher or a Hub International. And the challenge there is that their insurance brokers actually don't make a commission until the premium hits a certain level. For some of these folks, it's 30, 40, $50,000. And so as a real estate investor, where my average premium might be 17, 18, 19, $2,000, right? I'm not going to get any attention there. And so I'm forced to go to my local mom and pop insurance agency or a State Farm. And there's nothing wrong with that. That's the perfect place to be. But the carriers that those folks work with, they really are pushing their agents on home and auto business, right? Get the bundle, sell the home insurance, sell the auto. And then once you get them, then try and sell them the boat or the RV or the vacation home or the rental property. And so it becomes kind of that offshoot, that kind of the black sheep, right, of the family that
Yeah.
they just didn't spend a lot of time on. And so because of that, really finding somebody that knows and understands the space is super important, because that person is going to have market access to the types of carriers that are going to be able to really support you as a real estate investor. The second thing that I usually tell folks is, make sure every year you're looking at how much coverage you actually have on the property. What's come about, I think, in the last couple of years is that with record inflation, with record lumber costs, right? Labor costs are increasing, the amount of time it takes to even get contractors out on site, some of these things. A lot of folks just purchased their insurance when they purchased the house several years ago, and they actually haven't changed those limits. And so you don't want to get into that really tragic situation that we've seen here at Obie, where you've bought the insurance, you come to us after you've had a claim that the property was a total loss, there was a tragic fire, but you only had about 70% worth of the value to rebuild that house, right? You don't want to be rebuilding up to the first floor and then say, well, I'm going to be out of pocket for the rest of it. Because the tragic thing that happens in that situation too is you might have a lender that says, hey, you know what? The client didn't have enough coverage. We just want to take a check for our portion, right? We're not going to be involved in the rebuild. Whatever the remaining balance is on the mortgage, you just pay us that check, and then the insured is actually left with whatever the remaining balance is, and then kind of a burned out property. And so making sure that you have enough coverage if you're paying for the insurance in the first place is really important. And then the third thing is really risk mitigation, right? So making sure that your properties have a fire extinguisher, and you're taking active steps to make sure your tenants know what they do in order to turn the water main off, or to make sure that there's not going to be a fire. Those are the important things that you want to make sure that you remember as a landlord when you're taking your insurance into consideration.
Yeah, and that's a really good point, actually. I think, the best insurance is to, take the steps where you don't need to actually, use the use the insurance, right? So as far as like the experience that you've seen as an investor yourself and working with other investors, would you say there's some sort of like a checklist, or maybe some things that they can take as an investor as far as proactive steps to be able to prevent, obviously with natural disasters, it's going to be a little bit difficult to do that. But as far as man-made errors, what are some proactive steps an investor can be taking in order to avoid, tragic situations with their properties?
You're hitting the nail on the head there, because I think the interesting thing and the double-edged sword about insurance is you want to buy it so you have the peace of mind, but you never want to use it, and you're okay with paying for it for that peace of mind. And I think what enhances that concept right now is the fact that the property insurance market is hardening considerably, given a lot of the different circumstances that happened, the Houston floods that you just talked about, even the unpredictability of some of the storms, right? Even outside of hurricanes or wildfires, as you'll probably remember in Texas, probably about 3 years ago, right? In the winter, you had this unpredictable winter storm, right? I mean, Texas already, if there's any chance of sub 40-degree weather, the place shuts down. But the impact that weather event had on these carriers was something that they weren't predicting, right? They already run on fairly razor thin margins to begin with, and now you're adding in something that they weren't able to underwrite for, they weren't able to predict. And so because of that, the market has hardened considerably over the last couple of years, to the point where people's rates are increasing. Depending on where you're at in the country, they could be 5%, it could be 50%, 75% if you're in Florida. And so the best thing that you can do is make sure that you don't have a claim, right? Don't give the insurance carrier a reason to either increase your rates or to cancel you altogether. And so some of the things that we talk about there, your point's correct. Having a checklist, not so much for for the actual tenant, but something that you review with the tenant as they move into the property. We've also seen some landlords that actually have now taken videos, right, with their phone and have created like really nice instructional videos inside of almost a tenant's welcome package or tenant's operating package within the property, where they take a video to show you from the front door the exact path you need to take and exactly where the water main shutoff is at in the event that there's a flood or there's a water backup issue. They show them exactly where the fire extinguisher is at inside the property. Many folks, especially millennials and others, they've never even used a fire extinguisher. You don't want that first instance of actually needing it to be the time where you figure out, well, do I pull the pin here? Do I pull it? Do I spray it? What do I do here? And then on top of that, there are some other really easy, really affordable steps people can take. You'll never be able to protect against a big winter storm. You'll never be able to protect against or stop a hurricane from coming. But the other things that the top cause of loss inside of these properties that's controllable is fire, right? And so often those things actually happen in the kitchen. And so there's a device there's a fire blanket that actually you can leave under the sink inside your kitchen, open it up, tear the top off, and literally just throw it over top of the stove, and it'll extinguish a fire, or at least buy you enough time to get the fire department there to find the fire extinguisher and put that out before it spreads. Other devices that we suggest to some of our clients, there's a really novel device called a fire stop. It's like the size of a hockey puck, essentially, and it's magnetic, and it'll actually stick with the magnet to the underside of your vent over top of your stove. And if a fire starts and it gets hot enough, it'll actually disperse a powder everywhere, and it'll immediately extinguish the flame. And so I've seen, again, tragically, kitchen fires that have taken over the entire property. I've seen quadplexes go up just because of a stove that somebody had walked away from. And so those types of issues, right, the severity and the frequency of those claims, figuring out ways that you can control at least the stuff that's within your power, that's going to give you the best chance of having reasonable rate increases and at least being able to find coverage as well. If you're otherwise in one of those harder to find coverage markets like the Southeast, like a Houston or a Harris County, or coastal Florida or coastal California or the Mid-Atlantic.
Yeah, absolutely. And speaking on that, I mean, as far as the rates being different, right? There's obviously certain areas especially in the United States, where some properties are more subject to natural disasters than other ones, right? Like obviously, you know, it's hard to get a hurricane in Kansas, if you will, or at least harder to get a hurricane in Kansas than it is in like New Orleans or Houston. So as far as investing in certain markets, I know a lot of investors, especially today with all this technology, they're able to, and a lot of people actually suggest investing out of market. So aside from investing in the market that you're living in, picking certain markets to invest in. So as far as choosing the market to invest in, if you are doing a strategy like that, would you have any advice on maybe picking a safer market to invest in as opposed to maybe one with higher return, but are more subject to risks like natural disasters?
Yeah, I would say, coastal is very challenging, right? Being within 5 to 10 miles of the coast, maybe even further out, that's always a challenging market wherever you're at in the U.S. Certainly, Florida is very challenging. The New Orleans and Louisiana areas, Southeast Texas is fairly challenging right now. And then obviously like California with some of the unpredictability around the weather events, the wildfires. Those are your more, I think, challenging markets within the U.S. Beyond that, I think more broadly, any place where you talk about it and you think, wow, I've heard of something happening there, something sticking in your brain. Hurricanes, right? Any place that you think could get hit by a hurricane and actually have some type of material impact, that's going to be a little bit higher. Tornado Alley, right? Through the plain states, Oklahoma and northern. The Colorados, California, any place that you might have a wildfire. So some of those markets certainly have a larger rate impact than others. Some of the markets that from an insurance perspective, the Midwest, right? Non-coastal inside the Carolinas, inside Tennessee, right? And the suburbs of Nashville. All the areas that I think are starting to get a lot of attention, whereas the Southeast was very popular for a long time, right? Harris County, Texas, Florida, Georgia, a lot of excitement, Alabama, a lot of excitement, a lot of opportunity for new development. I think for a multitude of reasons, people are starting to move, I think, a little bit more towards the Midwest area to invest in. And that's also a really, really great choice as well from an insurance perspective. You can find much more affordable premiums inside of Ohio or Indiana or Tennessee or Illinois, Michigan, Pennsylvania, right? Heck of a lot cheaper than you can find inside of Georgia or Florida or Harris County.
Yeah, absolutely. So I guess like the question would be, should, or at least how much should an investor take that in account when it comes to picking their markets? Do you think that's something they should weigh, as far as their decision when it comes to maybe diversifying their portfolios, or is that something, that just kind of
You
it's
know,
a less more of a factor, right?
yeah, I would say it used to not matter as much, but I think we're moving into a world where it's going to matter a lot more, right? I think if you're anywhere in the U.S. besides probably Louisiana, Texas, and Florida, I would say, listen, like go grab an estimate, right? If you're about to go hard on cash, you want to make an offer on an LOI, and you want to generally see what the insurance price might look like. You can go to Obie's website. You can go to some of these agents that, again, a specialist that understands these markets. They can provide you with a pretty decent estimate. As long as that pencils out, and you're able to cash flow there, and you're comfortable with the expense on the insurance, recognizing that could go up 5, 7, 10, 15% year over year. That's an okay market, right? I think where people have started to get into some challenges is really over the last 24, 36, 48 months is they've seen these really great markets inside of Texas or inside of Florida, and it's really becoming a market where it's not even about the price anymore. It's about even having a carrier that's willing to write it. Right. There are places inside of Florida that, you might not be able to find it at all. You might have to go with the state of Florida's option, called Citizens, which is good. It provides that protection, but there's only so many people that can fit into that bucket as well before it slowly turns off. And so that's my caution, right? There are some very attractive looking markets from a rental perspective. And it doesn't necessarily mean that really high insurance costs won't pencil out. But once you do actually make that assessment, see how Ohio looks for you. See how Columbia, South Carolina looks for you. See how Raleigh, in the Durham or the Charlotte area looks, right? Check out the suburbs of Columbus, right? There are markets there when you start adding in some of these ancillary costs that will probably end up coming out a little higher than where you thought or where you hoped they were going to pencil in at. Check out and see if there are potentially some other opportunities there as well.
Yeah, that's a really good point, right? So as far as investing, you have to look at the whole picture, not just kind of the price point or, how the market's doing, right? So as far as insurance factoring into that, it is a factor. And, you could potentially have a property in a really great market, but, you've seen this happen all the time, really year after year with some of these coastal cities, entire cities are, tragically wiped out, or just completely not the way it used to be. And it takes a lot of investment to get it back the way that it used to, for it to be even profitable again. So as far as, considering, the cost of your insurance, would you, kind of be able to make, I guess, like a comparison between, maybe an investor who might be, a little bit, you know, they don't want to make the move to, maybe pay a higher insurance premium. Maybe they get covered for less. And then a different investor may be paying a little bit more, but they're covered for more, as far as, the math breakdown between, you know, what would be like a good kind of ratio there as far as how much money you're actually able to save just by, maybe paying a little bit more for insurance just to cover against, certain events that can happen.
It's a great question. I think it really comes down to the comfort level of you as an investor, right? So many people talk about their fear about jumping in and taking that leap into becoming a real estate investor is the unknowns, right? And the things that keep them up at night. And insurance can be one of those things, right? And so there are certainly ways of cutting 25, 30, even potentially 40% of your insurance costs down. But you're going to start playing with things like deductibles, right? You might want $1,000 deductible. You might want a $10,000 deductible. There's a material difference between the two, and they're going to change how you think about and how you use this coverage. And so if you have a $10,000 water leak and water damage, maybe you're in a condo building, stuff trickled down to the people below you, you're responsible for that now, you know, at $1,000 deductible, $10,000 payout's great, right? You use your insurance. That's what you bought it for. That's what you're paying for. But at a $10,000 deductible, you're not going to use it there. You're going to use it when there's an issue for $25, $50, $100,000 in potential damage. And so you want to think through that. And you want to evaluate what that savings looks like compared to potential events that come up. We have clients that have never used their insurance, right? But they have sat at $1,000 deductible, and they do that for peace of mind, right? Even though they recognize that if they don't use the insurance for 5, 7, 10 years, they might have saved a lot of money. They might have saved $10, $15, $20,000 over that period of time, but they don't know that, right? They're not comfortable with that. And so that's a decision, that's a P&L decision, and it's also a comfort level decision for everybody as well. It's very mental, right? Being able to make sure that out of all the issues that you might have, out of all the unexpected tenant calls at 2 a.m. because they locked themselves out, or something ultimately happens, the air conditioning units failed in the middle of a Houston summer, right? Like those are the things that landlords decide that they want to take on. You're okay with the fact that these things might occur. A lot of people look at insurance as, hey, let me pay for it. Let me have it when I need it. And so that's kind of the decision point that people have to make for themselves, is understanding what that looks like, and then really going to your agent or to your broker with those defined characteristics in mind. Because the challenge is for a lot of them, unlike what you can do at Obie, they have to take that information, then they got to enter it into a spreadsheet or a PDF, and then they got to go out to all the carriers. Those carriers are going to do rates. They're going to send them back to the broker. If you then say, hey, thanks so much for the $2,500 deductible option, but I'd love to see 1,000, 5,000, and 10,000, they got to go back through that entire process all over again. And so you're not making a lot of friends there if you're doing that. And it's just, again, a function of how kind of broken and backdated the market really is here. So that's what I would think about for folks, is really trying to make that decision and making an informed decision about the comfort level that they have.
Right, absolutely. It's going to be a little bit different, I think, for everybody. And like we just talked about, the market you're in and how how subject you are to the actual risks, right? If you're in a safer market, maybe that decision is going to be a lot different than if you live in a coastal city or you're like right next to the beach in like Galveston, Texas, or something like that, right?
Yep.
So it's going to be a big factor when it comes to making your decision. So you brought up a pretty good point again here as well, as far as the different process of getting essentially quotes and getting insurance through Obie versus the traditional. I think you mentioned a little bit more antiquated other insurance brokers that are out there. So would you mind explaining kind of the difference between Obie and some of the other ones that are out there, and how exactly does Obie works when it comes to working with investors and making their life a lot easier and giving them the peace of mind that they need when it comes to their rental properties?
Our goal at Obie was really to solve the challenges that Ryan and I had as real estate investors and as operators. And so we wanted a solution that was fast, that was transparent, and that was affordable. And those were things that, it kind of comes down to that phrase, you can have it, good, fast, or cheap, and pick two. We really wanted to figure out if we could get selfish and get all three with the insurance space. And so what Obie really became is a platform where you can sit on your couch on a Saturday morning in your underwear if you want to, and buy insurance without having to talk to anybody, and check that off your list, right? And so that's what we were able to do. We took the fact that this long process from a client or a lead to an insurance agent or multiple insurance agents, filling out all the exact same information, sending that off to multiple carriers, and then there's somebody physically receiving that submission at the carrier who's sitting down in front of an Excel spreadsheet and plugging in, again, all the data, right? So at this point, the clients entered the data, the agents entered the data, the carrier now has fanned this out to the appropriate underwriter. And then that underwriter is physically entering that data inside of an Excel spreadsheet effectively. And that's what's coming up with a rate. And so we looked at that and we said, why does it have to be that way? Right? Like, why can't we provide clients with an opportunity to do this for themselves and allow computers to do the exact work that somebody else was physically manually re-entering that data on? It's all a formula. It's complex, and it's probably got like 100 different tabs in that spreadsheet. But that's effectively what Obie was able to do. We were able to digitize that underwriting, that actuarial process, to make sure that we could provide a rate to somebody in 2 minutes or less if they wanted to. And then if there are agents then that also want to come in and use the product, they can do that as well, right? If we can make their lives easier, because we're not always going to be able to connect with folks through the different channel partners, the different distribution methods that we have. These agents are also looking for a carrier option and a policy and a quote that meets the expectations of folks that have grown up with an iPhone and have an expectation of technology. And I think that's really where the market's at this point, especially the real estate market, as you have folks that are, in their mid 30s, their mid 50s, that are really starting to get into something that isn't just your traditional investing in the public equities market.
Right. Absolutely. I think, being able to get what you want easily and quickly, that's so important, right? And I think that's a big problem that you solve for people. And I think, when it comes to, something like insurance, where it's not the first thing that comes to mind, or it's not something that a lot of investors want to take a lot of time into, if you're removing that stress and that time by being able to provide them with a easy technology solution, then it's actually going to make it, I guess, less stressful for them to think a little bit more into this, right? And think a little bit more about what they're going to do with their insurance. So I think that's a really cool solution that you guys are able to offer investors with this platform.
Yeah,
Yeah.
it's really about putting investors in the driver's seat, right? What I always push the team on, and we were finally able to deliver on it, at some point last year. I wanted to get to that final page after putting in all the information I used to send to our insurance agent before becoming one myself. And then I wanted to play around with the coverages, right? I wanted to get that final checkout screen with a bunch of toggles and sliders and say, well, if I increase some of my limits over here and I change the deductible over here, what would the price look like? Well, what if I want to add some of these additional coverages, but I want to lower the deductible? What does that price look like? There's so many different variables that it's impossible, right? To no fault of anybody's traditional agent out there. It's no fault of their own that requires them to go back to the carrier every single time, right? And at some point that does get annoying. And even as the investor, I know that, right? So I kind of just take one of the options that was provided and hope for the best. But then for me, I always felt like still I was out of control with that. And so in the event I had a claim or something else that came up, it almost always felt like somebody else made that decision for me, right? The couple of PDF quotes that I got are the things that somebody else made that decision on. And so what we really strived for at Obie, and what I think we finally got to, is we get to that opportunity for you to make that decision. You can have less coverage, you can have more coverage. You can have a lower deductible, you can have a higher deductible. But at the end of the day, you made that decision for yourself. You're deciding, do I want to take less risk? Do I want to take more risk? Do I want to have less coverage or more coverage? And that's the thing that I think people ultimately appreciate. And I think that hopefully playing a little bit of a part in changing the overall feeling and narrative around the insurance that people are investing in themselves.
Right, absolutely. I think, when you think the decision is being made by yourself, that you're a lot more confident in that decision. So when people go on your website, right? So is there any, I guess, like additional education that you give people as far as, what insurance policy they should have, or, as far as the type of investing they're doing or the scale of investing they're doing, what are some things to look out for? Because when it comes to people making their own decisions, sometimes they do make the wrong decisions. So you want to give as much education and as information out there as possible. So I was just wondering if there was anything like that either you can share here, or maybe like on your website, you guys have more education on or information on this.
We do two things. The first is that inside of the actual flow, the quoting flow, we try and provide some education there, right? What does this mean in layman's terms, right? Explain to me like I'm a fifth grader. And so we try and help guide somebody through that process to be able to make a good decision. And then the other thing too is that we have a pretty robust blog at this point. A lot of folks just kind of like throw blogs together. We get a lot of our topics, probably mostly all of our topics, from questions that are actively coming in from clients, right? If we start seeing this thing actually come up a lot, like recently, again, the price of lumber is, had for a long time over the course of the 18 months, it skyrocketed with inflation. And people were really trying to understand replacement cost. They were like, wow, I bought this property back in 2018 or 2019, and I was paying, I was estimating that the replacement cost would be $85 a square foot. Well, even then, that might have been a little bit low, but it was enough to get by. But in 2022 or 2023, you can't rebuild a property for less than $120 a square foot anywhere really in the US. And that's like the lowest quality grade construction you can get. And so those are the aspects of things that like people can get themselves educated on to start making some of those decisions and some of those calls to again feel like they're empowered to make that decision.
Yeah, absolutely. I really like that, right? I think investors, they're going to really appreciate that as far as, being very transparent and then also being able to make that decision on their own. So that's awesome. So as far as, the growth of the company and anything just looking into the future, I'm sure, being very tech based, you guys are always improving and adding new things to the program and always have a, vision into the future. So as far as the future development of Obie and what you guys are trying to do here in the investing insurance space, is there anything that you can talk on as far as new things coming out, new developments, things that you guys are working on that you're really excited about moving forward?
A couple of things. So we recently expanded throughout the entire U.S. So now Obie is available to really any investor within 50 states plus Washington D.C. So that was an exciting milestone for us, making sure that we could cover folks no matter where they are in the U.S. The second big thing too is really starting to now look to the future, right? We're starting to make a really good name for ourselves and building a brand in that smaller single family rental kind of 1 to 4 unit type property space for those landlords. But a lot of the folks that we work with don't just invest in that segment, right? They invest in self storage, small office, small retail, multifamily, right? Some larger unit buildings. And so starting to look to those other avenues to take the exact same process and exact same business plan, business model, and start applying it to the other areas that our existing clients are already operating in, right? There's no reason why we shouldn't be optimizing for the fact that you might own 2 single family rental properties, but you and a couple of friends also decided to go in together on a 20 unit deal, right? Because you got the bug in you and you decided you wanted to up the ante and really, start growing into the apartment space. And then one of you might also find that, hey, a couple of years into that, I found this great self-storage location, right? Mom and pop owner, they're looking to get out, kids don't want it. Really great opportunity to start raising rents, kind of changing and cleaning the place up a little bit, and growing that opportunity, and giving an exit to owners who've probably had it for 20 or 30 years. Those are all of our existing clients, but I don't have a product for them yet. And so that's really where Obie's going long term, is really becoming the brand for the broad SMB real estate investor. I'm never going to be able to give the insurance to the Blackstones of the world, right? They're so big that they effectively self-insure. They build their own captives. They have a way of spreading that risk across the 60, 70, 80,000 units they might have. But contrary to what the front page of the New York Times might tell you, Wall Street is not usually your landlord. Right? It is the small mom and pop owner who, again, wanted to start diversifying out of the public equities market. Maybe bought that initial condo and decided not to sell it when they bought their first starter home and they became accidental landlords. They got the bug in them. Maybe they bought another condo unit in that building or a different property. That's the large majority of the 18 million landlords that exist in the US. And Obie's really at a point now where we can start really providing services to everybody broadly across that segment.
Wow, that's awesome. Yeah, and then I know definitely, a lot of investors, that's what they do, right? They up their game, right? Even full-time investors, right? They go from flippers to going into multifamily and then going into, maybe commercial retail, different things like that. And I've seen this over and over again with a lot of the investor friends that I work with as well. People upgrade and they're going to need the same things, right? And I'm really glad that you guys are expanding that way because there's a lot of asset classes out there. I think self-storage you mentioned, definitely one of the more popular ones, in these days for a lot of people to invest in. So that's really exciting that you guys are expanding into these spaces. But Aaron, I just wanted to thank you for your time today. I know your time is valuable. So I want to thank you for being on the show and sharing a lot of your knowledge and a lot about your company with us today. For anybody who is listening to this that want to either learn more about what you're doing or maybe want to reach out to you or learn more about Obie, what are some of the best places to follow you guys on or to get any more information about using your company as a service?
Yeah, folks can go to obieinsurance.com. It's OBIE insurance.com. They can email me if they really want to. I can help them find whatever they're looking for, or be a resource for them. It's Aaron at obieinsurance.com. And then they can follow us on Twitter or LinkedIn for some of that educational content that you were talking about earlier.
Yep, absolutely. We'll make sure to leave all of that information in the description down below so that way it's easy for you to find. But other than that, Aaron, thank you again for being on the show. Before I let you go here, is there any last pieces of value, any last tips you want to leave with us before we let you sign off?
No, 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 no. Just, again, find the right agent, find the right broker, and make sure that you're reviewing your policy on an annual basis. It'll pay off in dividends, even if it never pays out in the form of a claim.
Right. Absolutely. Aaron, thanks again. And thank you for tuning in. And we'll see you on the next show. Take care.
Thanks.